Good afternoon. We welcome all the members to today's session and today's webinar, for which we are having CMA Robin Singh as the faculty. The topic for today's session would be how different is UAE VAT and Indian GST. For this session, we are having CMA Robin Singh. Sir is a director at Deloitte. CMA Robin Singh has expertise in transportation and hospitality sector businesses, helping them navigate through the complex regulations and optimizing tax efficiency, achieving strategic objectives, and partner to deliver innovative and tailored tax solutions that enhance their performance and stability. SIR is in receipt of multiple awards and recognitions for its outstanding performance and contributions to the tax and regulatory services teams at Deloitte, Ernst Young, Sony, Bharti Airtel, and from various other clients. Sir values collaboration, integrity, excellence, and strives to bring diverse perspectives and experiences to the group. Sir is also an eager learner of new skills, exploring regional tax, regulatory challenges, and opportunities. For this session, to start off, we would request CME Rajendra Singh Bhati sir to share a few words. Over to you, sir.
Thank you, Priyanka. Indeed, today is a great pleasure to have this program with the help of a CMA Robin Singh, our own Robin Singh. If we say it's a long one, my own Robin, I can say, and he's accelerating the things from the India to Middle East. He's like, I was just asking before the program, Robin, where are you? In which country you are? Because that is the so. Because I think today we have stopped him to share his some views with us. So otherwise, he's always busy with the. So thanks, Robin, for sparing a time and be a part of this knowledge sharing session. And thanks to my president and vice president, they have accorded us to be to organize this program in absence here. And thanks to all the members, those who are attending this program and showing their interest in the topic. So in our committee, always whenever we have some demand from the respective member, so this was the one of the demand from the member that some similarity is coming in UAE. This VAT is coming. Earlier we were having some VAT also. We've been work in the VAT, and then GST came. So that other like India has a state provincial and things are there, but in like Middle East and other country, their state provincial is not there. There's a national capital, there's the national tax department is there, and some sort of things in the neighboring country. So people were demanding that in UAE, what are the things, and then so I found Robin as a best person and not taking a much of a time in between. So because we have a 1 hour and 30-minute sessions. So I would welcome Robin Singh and all the members, those who are present online. So be with us. So we will definitely have a good technical deliberation. Thank you. And thanks to my taxation research department people, those who are working day and night and coordinating with the people and organizing such kind of a program in future also and today also. Thank you. Thank you, Priyanka. Over to you. Next.
Thank you, sir. Robin Singh, sir, you are live now.
Thank you so much. Hello, everyone. Good afternoon. So thank you so much to Mr. Bhati for arranging this session. And he already mentioned about my travel. And today, of course, I am here in the Kingdom of Saudi Arabia. And just before starting the session, we're just talking about that, where you are, what you are doing. And I was sharing with him that, look, how interesting this market has become. Every day you have new opportunity in Middle East. It's been about 6 years for me that I am in the Middle East, and I've not find a single week wherein we are not talking about a new opportunity in taxes or finance sector in general. So first of all, thank you so much, Mr. Bhati, for organizing this particular session. Along with you, I would also like to thank the complete council, our president, vice president, and of course, the whole council, including each and every person who is looking forward to this particular session. I'm also thankful to Priyanka and the whole team because these guys are following up with me on multiple occasions. Sometimes I'm not responding and other things. So please bear with me. And thank you so much for being very, very much like coordinated and arranging for this one. Uh, Briefly, Priyanka already mentioned about myself. So myself, CMA Robinson, I'm working as a director with Deloitte in Middle East. Before that, I was in India with Ernst & Young when GST got implemented. So this is pretty much it about me. Let me just right away jump onto the DAC. I would rather prefer to close my camera and share my screen now. Priyanka, can you confirm that you can see my screen?
Yes,
Sir,
Robin.
we can see your screen, but if you keep the camera on, it will be a picture-in-picture mode wherein we can see you and the screen both.
Amazing. Let me do that then. Is it in picture mode now?
Yes, sir.
Amazing.
Yes, sir.
So, yeah, thank you again. And let me right away get into the topic now. So we are going to talk about India and UAE VAT. So of course, India, we GST in place, but in the past, and I know most of us on the call, if not all, must have dealt with VAT at some point in time in the past. In India, we already have GST, and UAE VAT is there. Today, I'm going to take you through what are the similarities and challenges in both the countries and how we can convert some of the challenges into opportunities and how we can just get some benefit out of the similarities because anyways we are doing so much in India on GST. So I want to start with the very powerful quote that I always find very fascinating, and which is nothing is certain except debt and taxes. And why it is because to me, of course, we all are going to die one day, but at the same time, taxes are something which is really, really becoming a part of everyone's life, not even today, since many, many years, or I would say ages. But why this quote is relevant for us? Because if you look at it a couple of years back, whenever we thought about UAE or for that matter Dubai, we always thought about Dubai for the maybe tourism, maybe travel. We always used to think that there is no taxes in Dubai, or for that matter, if I look at from a overall structure perspective, there is no taxes per se in UAE. So but that is not true now, and that's the reason I'm saying that one thing is certain, that is taxes, and that's the reason I find this particular quote very, very powerful and relevant for this particular session. Now, not only VAT, if you look at the UAE tax structure currently, so you also have CIT, which is corporate income tax at the rate of 9%. They have recently introduced this one. They already have transfer pricing, CBCR reporting. They're also in discussions with applying or implementing Pillar 2, which is, of course, a suggestion from OECD group. So if you look at current environment in UAE, and I'm talking about the professional tax related environment, that covers almost everything that a person can think of or a professional can think of. And that's where it brings lots of opportunities for professionals like you and me. So this is one of the item that I would like to share with you, that in the past there was no taxes in UAE, but there are multiple taxes now. One important thing that when we talk about multiple taxes, personal income tax is still not there. And this is one of the reasons that people like us still prefer to work here, because you don't need to pay personal income taxes here. Now, today I'm going to cover or talk about the basics of GST. I'm sure almost everyone on this call knows basics of GST, but I'm going to link it with basics of VAT in the UAE, just to give you a broad understanding that what is the structure of VAT in UAE and how it really impacts us as a professional. Because, I mean, when you talk about any new taxes, I can tell you, if not 80%, 60 to 70% items are the same. More importantly, the core principle of the taxes remains same. And we will try to keep the session interactive, ask 1 or 2 questions in the chat session. And of course, I'm going to touch upon some opportunities for professionals like us. So let me just right away jump into the similarities. And like I've mentioned, both the taxes, be it India GST or UAE VAT, both are nothing but value added taxes. Correct. Even if you say GST, GST is nothing but a refined version of value added taxes. That's how I read it actually. Back in, like, if I talk about 1st July 2027, before that, if you look at it, we used to deal with VAT in India, that was mainly on goods. But here, VAT in UAE, and for that matter, Middle East as a whole, VAT is applied goods and services on both actually. And this is something sometime a few of my colleagues or CMA colleagues always ask that, Robin, when you talk about VAT in UAE, is it on goods or goods and services both? So answer is very, very simple. It's on both. So there's no concept of service tax per se in UAE. So you need to apply VAT on all kind of supplies. And when I say supply, it is supply of goods, supply of services. Now, it is revenue neutral, like we have GST. So it is very, very similar to what we have in India. One thing that I want to cover, and I always find it very important for professionals like us to understand, that what is the legislative structure that we follow. So in UAE, VAT legislative structure is very simple. Number one, you have an agreement between GCC countries. When I say GCC, this is really important to understand what is GCC. GCC stands for Gulf Council Corporation. So basically, there's a council which has been set up by the 6 countries. Number one, UAE is one of them. KSA, which is Kingdom of Saudi Arabia. Third, Oman. Fourth, Bahrain. Fifth, Qatar and Kuwait. So these are the 6 countries, and these 6 countries have developed one single agreement. And that agreement or treaty provides that, look, we are going to apply VAT, and that VAT is going to be at the rate of 5%. So they have came up with a structure that how VAT should be applied, what should be the transaction mechanics, and how we should implement in the respective countries. Now, agreement is there in place, and why I'm sharing this information with you, because if you are going to find out any taxability of any transaction, you have to refer all these 3 documents. Document number 1, GCC treaty or agreement, VAT law, and VAT regulation. Now, within the agreement, there are some basic understanding of the structure that they've provided, and that agreement is very short. You won't find a detailed description of requirements or obligations, so to say. Same goes with VAT law. VAT law also provides you that, look, we have an agreement, but this is the specifications that we need to follow in UAE. Then you have VAT regulations, which provides some further understanding about the law and agreement. Followed by these 3 documents, you also have some guidelines, and sometimes authorities also comes up with the public clarifications. So when I say authorities, I'm referring to the UAE tax authorities, which is FTA. Time and again, they issue clarification in the same manner that back in India, if you have some notification circular, And that circular clarifies the taxability or a position on any specific a transaction. It may be goods or services. So this is the pretty much a structure that UAE follows. And this is really important for you to understand, because if you are going to approach a client in UAE, or for that matter, KSA, Oman, Bahrain, whichever country you're targeting, you have to follow these three documents to understand what are the VAT requirement and obligations. One important thing, out of these 6 countries, only 4 countries have implemented VAT as of today, which is UAE, of course, we are going to touch upon today. And of course, when it comes to UAE, we only talk about Dubai, which is the main hub. But at the same time, you have 7 different states within UAE, wherein the same level of VAT or the implications of VAT are there. KSA, Kingdom of Saudi Arabia, 15%, they apply as a VAT rate. Of course, they also have the similar kind of arrangement. More or less, you need to follow the same agreement. VAT law is a bit different, regulations a bit different, but 80% of the items are same. Oman, they also have implemented VAT. Bahrain, they also implemented the VAT at the rate of 10% in Bahrain. Qatar and Kuwait, they yet to come up with the final date of implementation. Qatar was committed to have the VAT implementation done, and they was thinking that the moment FIFA is completed, they want to come up with the implementation date. Unfortunately, there are some discussions going on, and yet these 2 countries yet to implement the VAT. Now, within this slide, if you look at it, I'm talking about the similarities, and what I conclude, or what I, in my view, what is it? That it is almost same what we have in GST. Within this slide, I'm also sharing that not only UAE, you have a broader picture to look at, which is KSA, Oman, and Bahrain. And not only that, you also have some opportunities coming in Qatar and Kuwait. So this is really interesting slide for all of us to understand, because the objective of this discussion is not to go into the technical discussions by saying, oh, what is bundled supply or what is export of services, rather to give you an understanding what the law is all about and how you can make most of it out of it. Now, just to make you more like clear around what are the different requirements. So I try to make it very simple table wherein I can give you some gist of basic things, which is effective date. So we all know that effective date of GST is 1st July 2017. When it comes to VAT in UAE, 1st January 2018 actually. So if you look at it, UAE VAT is just 6 months younger than GST in India. But the thing is, GST in India, we all always used to do VAT. We all always used to do service tax, maybe excise, maybe central sales tax. So we all were very much familiar with the taxes. But in UAE, especially the local people, they were not really aware about the taxes. And I can tell you, the people who were working there already, they were also not really working on day-to-day basis when it comes to taxes. Now, this was the main opportunity for all of the professionals, and people like me have shifted from India to this region, and people like us are already like practicing in this particular sector since last 6 years now. Now, if you look at rates, in India, of course, we have multiple rates. I've intentionally have not put any range because sometimes it's not about the GST rate, but it's also maybe other fares and taxes that you need to look at. But when it comes to UAE, it's just 5%. But few of my friends, colleagues, or maybe CMAs, they simply say, the Robin, it's just 5% on the transaction. We don't have that much of complexity. Then do you really think that we should be focusing on UAE because it's 5% flat? If you look at it all across all the VAT regimes, it's like that. It's 5% flat. Okay, that's all fine. but how it impacts positively. If you say in India there are different rates, so are you saying that classification of rate is the only problem? Because if you say so, if you say that in India you have multiple taxes, so classification of rate is the only problem? No, there are multiple other issues. I won't call it as a problem, but I would say difference of opinion between the taxpayer, between the consultant, or between the exchequer or the government. Same thing happens here in Dubai, or for that matter, UAE as a whole, because you have all those kind of challenges that are coming from all across the world. Now, registration threshold, there are different registration threshold. And when it comes to, I mean, for GST, you know it better, but for UAE, you know that 80 lakhs, I put all these, both the numbers that's approximate. Why? Because in UAE, you have a threshold of 375,000 dirham to get the registration done, which is approx 80 lakhs in Indian rupees. So I've intentionally put these numbers to look at it, and you might have some comments to put at it. So I can also understand that you guys are really listening to it or not. Now, place of supply and point of supply. Each one of you understand that what is place of supply and point of supply. I just wanted to mention one important thing, that place of supply and point of supply, these two are the important factor in GST. And the same thing you need to follow in UAE VAT as well. Now, when it comes to place of supply, you know, we have different provisions available in GST. What would be the place of supply of goods? What would be the place of supply of services? In the same manner, you have the place of supply of goods and services in UAE. Now, I've kept it descriptive without mentioning here anything. There's a reason for that, because if you ask me, the GST and VAT is all about place of supply. Once you are clear about place of supply of any transaction, you can probably close the taxability, understanding of the taxability of that particular transaction to up to 90% actually. And then it comes to point of supply. If you are really clear what is the point of supply of your transaction, be it service or be it product, you are really clear that at what point in time you have to pay VAT or GST. Now, in both the cases, I can tell you the point of supply is almost same in both the jurisdictions. It is either receipt of payment, issuance of invoice, or provision of services or delivery of goods actually. I'm keeping it very broad because if you go specific transaction by transaction, there are so many considerations to look at. Where is your customer is resident? Where is your supplier? What is the place of delivery? Everything matters when it comes to identifying the place of supply and point of supply. Now, one important point that I want to mention about place of supply, that is that if you look at the current servicing arrangement, place of supply of service is generally where you perform that service. But there are some categoric exceptions wherein the place of service or place of supply of service would be where the actual performance is considered or happen. And I can tell you, these issues are there in India, and the similar kind of issues are there in UAE, Middle East, everywhere. Okay, so we are going to touch upon a few items in the upcoming slides. When it comes to RCM, yes, there's a reverse charge mechanism in GST in India. When we record anything in RCM, we also pay that amount in cash. The benefit in UAE is you just record any particular transaction in RCM, but you don't pay anything in cash. That's a disclosure requirement. Now I'm going to come back and ask you, because I was not able to use the Q&A arrangement here. Can you please ping what is the understanding that you have? What is the registration threshold for GST in India? And what is the registration threshold for VAT in UAE? So I want your comment on this one because I've just mentioned these numbers randomly. Let me just move ahead, and at the end, I'm going to look at your responses to look at it, what you have responded, and accordingly, I'm going to use those responses for our Q&A session at the end. In between, I also want to cover other points, domestic reverse charge. Any of you wants to guess what is domestic reverse charge? Can you please put your understanding in the Q&A section that what is the meaning of domestic reverse charge? What could be the domestic reverse charge? So my question number one, do you think that there is any domestic reverse charge in India? You can put your answer right away in the chat box. The problem is we don't have the Q&A session available here. Otherwise, I could have used it as in the live session. Okay, so I will give you probably 5 seconds to respond. And my question is, do we have any domestic reverse charge in India? Okay, next, do we have zones in India? I think this should be the very straightforward answer. And the idea is just to involve you in the discussion that we are having and just to give you more understanding about the differences and similarities. So I'm repeating my question. Do we have zone, concept of zone in India? If I say zone, I mean, my understanding of the zone is spatial economic zone. Okay, I'm jumping on to the next one, which is advanced ruling. Do we have the concept of advanced ruling? Do we have litigation multiple forums? Yes. The last one, which is VAT refund. And this is very, very important for all of us. Do we have VAT refund for non-residents and travelers or tourists which are coming to India? I will give you maybe 5 to 10 seconds. Okay, so we will see the answers, whatever the responses you have provided, but in KSA and in UAE, there is a specific provision which caters to domestic reverse charge. And especially in UAE, we have domestic reverse charge for certain items, such as gold. What happens in this case that if buyer and seller both are in UAE, then the buyer can apply reverse charge and there's no need to apply VAT on the forward charge. You must have seen that reverse charge generally apply only for the international transactions, but in this case, is a concept of domestic reverse charge as well. And this is something that I wanted to highlight to you as not the similarities, but an exception to the standard process. Now, when it comes to zones, there are some designated zones in UAE, more importantly, nearby area of Dubai. And you must have heard about these zones. And that's the reason I've kept zones in a different color, because you might receive some questions, queries from your clients, from someone. If you're working in UAE, then you might also have some working within your company that you're dealing with the mainland and the zones. Now, there are special rules and within the zone, and Mr. Bhatti and team, I can tell you, I can conduct a special session only covering zones. So there is a lot to talk about in the Dubai zones. There are multiple Dubai zones actually, or I would say UAE zone, put it in that way. Most important one, which is nearby the coastal area, which are fenced zones actually. So you can take your product there and they can go out from the zone itself without paying additional taxes such as customs and VAT. You can get some benefit out of it, similar benefit the way you have back in India as a special economic zone. Although the purpose of a special economic zone is a bit different, and these designated zones is a bit different. When it comes to advanced ruling, you must have heard that in the beginning I said that having 5%, and people can say, oh, it's just 5%. Yes, it is just 5%, but other issues remain same. So I've already gone through the place of supply, point of supply, but I can tell you defining the place of supply is a bit tricky. And we all know back in India, when it comes to GST, sometimes we struggle to define the place of supply for specific items. Same struggle you will see here in UAE. Sometimes there might be some struggle for defining the point of supply, especially when I came in here and there were so many transactions that were already completed before 1st January 2018 actually, and the actual invoicing was done after 1st January 2018. So the question is, do we need to pay VAT or not? And then you need to refer the transitional provisions. In the similar manner, you might have n number of scenarios in your company with your client wherein you need to apply advanced ruling. In the similar manner, the way we are applying advanced rulings or tax rulings back in India, you can also apply here. You can apply public ruling and you can apply a private ruling, putting through all the basic details for completing a form and everything. Now again, how to apply for advanced ruling, this is a subject in itself for UAE. Now when it comes to litigation forum, yes, the way we have litigations back in India, we also have some litigation here in UAE as well. And why it is coming up? Because the FTA, which is the tax authority, local tax authorities in UAE, they are very active investigating, completing assessment, doing audit for respective taxpayers. And again, as a professional, either you are in practice or you are working in any of the company, you can support these audits or assessment as wherever needed. Now, the last one is VAT refunds. This is something probably a bit new, which is not there in India GST. Correct me if I'm wrong, because as long as my understanding goes back in 2017, it was not there. So I'm not sure. The provision was there, but I've not seen this thing in practice. But here in KSA, you have this provision wherein VAT refunds can be provided to non-residents, or VAT refunds can be provided to the tourist for buying some product from UAE, and they can get it refunded using a specific format and procedure. One important thing that when I say that there is a provision available for the non-resident, so what does it mean? This means that if I am a businessman or I have a business in Dubai, and if I'm incurring any VAT in Dubai or UAE, sorry, let me put it UAE, not Dubai, because we all used to say Dubai. If I'm incurring any VAT in UAE, I can apply for a non-resident refund there. There are some conditions attached to it. You need to fulfill basic requirements. One of the requirement is that in whichever home country you are, that particular country should also provide reciprocal arrangement, which means that your country should also have the similar kind of provision to allow refund to UAE taxpayer. Now, there is one more condition attached to it, that is that you should only incur those costs as part of your business activities. So if you are incurring any expenses which is personal in nature, so authorities have all the right to reject it. So this is something which is very, very important, because there are lots of businesses who are incurring VAT in UAE. They want to apply for refund, and you can assist them filing this refund. I can tell you from my experience that people are paying good amount of money to get this refund back, not only on fixed fee basis, but if you say that, look, I'm going to get back maybe 100 million or maybe XYZ number, just give me 5% as a contingent fees, and I'm going to bring you maybe this much of money. And people in general are really like, they're not worried about 5% if they are getting the amount of 95%. And this is something I really find a really lucrative and very important a service offering as a professional or a person who is working in any of the company as a CMA. Now, we have already talked about a couple of items in different sections. I just want to cover few items when it comes to challenges across GCC. So if you look at it, whatever I have talked about up till now, everything is very much similar to India GST with few exceptions. And those exceptions are something that you can learn very easily. So yes, sometimes procedurally it takes time to get the learning developed. But if you ask me, you can learn all these items very easily. Maybe a couple of learning items that you need to look at. Probably you need to look at some doing business in UAE. So for example, I'm from Deloitte. You can go on Deloitte website. You can just download doing business in UAE guide, not only related to taxes. That guide will also give you some understanding around how to register yourself in UAE, what are the regulatory and legal requirements, what are the tax related requirements, and other requirements. So you'll be able to learn things very easily and quickly. Now, I want to cover this slide, and I've only capped 4 topics here. When I say challenges across GCC, these are not challenges. These are interpretation issues. And one of them is export of services. I'm 100% sure at any point of time in your career, you must have noticed that tax authorities in India, be it was service tax regime or it is GST regime, they try to challenge if you provide any export of services and if you say, oh, it's 0 rate of services. They always come back and they say, oh, you know what, there are some conditions. Can you please let us know if you are fulfilling all the conditions? Is there any condition which is missing? Similar kind of challenge we see here in UAE. And not only in UAE, we see all across all the countries that are falling under GCC. Now, export of service in general are 0 rated here in UAE. And I also wanted to refer KSA because KSA, which is Kingdom of Saudi Arabia, is becoming a bigger and bigger market day by day because they are investing lots of amount in multiple sectors. I'm going to touch upon KSA a little bit at the end, just to give you a holistic view of the Middle East or GCC countries. But coming back to this particular topic, which is export of service. So this is one of the discussion point that authorities always challenge, that whatever the VAT you are applying on export of services, you have to fulfill all the conditions. Now, there are multiple conditions. Again, this needs a specific, I can talk about maybe 45 minutes on export of service itself, just to try to share the argument from the tax authorities, why they say this is not export of service, an argument from the taxpayer, why taxpayer always says this is export of services. And this is something which I think you have also seen and learned during your practice in GST in India. Now, second one is related party. Now, I know back in the days, related party transaction was really like exciting for the cost accountant like us, because we used to talk about the valuation of the transaction. I can tell you the transaction value is always important when related party transactions are happening. And here you talk about UAE, you talk about KSA. any transaction that you complete with the related parties that needs to be on fair market value. Now the question is, what is fair market value? If we are providing any discount to our employee, is it considered as a related party? If yes, then at what value we should pay VAT? For example, if someone is working in a supermarket here in UAE, and if supermarket allow 20% extra discount or 10% extra discount to their employee, what should be the VAT valuation? It should be on discounted value. Is it should be on fair market value? All those kind of questions. Now the third one is vouchers. I can tell you again, voucher is something all across the world. I'm not talking about India GST. I'm not talking about UAE or GCC. Vouchers all across the world, and especially my experience with EU VAT, which is European Union countries, you always find it very, very tricky subject. You need to understand what is voucher. If the voucher that you are selling, it is a qualifying voucher or not. Do I need to pay VAT at the time of sale of voucher, or do I need to pay VAT at the time of redemption of that voucher? This is always, or this was always an issue back in India. There was some very landmark judgment from Sodexo, or for that matter, if I talk about NKSA, so there are so many challenges which are roaming around, be it miles, be it air miles, be it your local loyalty programs that people are running. Same goes in UAE, and this is again one of the hot topic and discussion point. Now the fourth one is transportation. So transportation in general, transportation services are zero rated if it is for international transport. And there are some exemption, there are some zero rating if it is for domestic transport. Now in this case, there are some services that you can provide with the transportation, and those services can be qualified as zero rated subject to some conditions. And all across all the different countries, I always struggle to establish that if any specific transaction that I am providing with transportation is subject to zero rate or subject to 100% VAT, which could be 5% in UAE, 15% in KSA, and 10% in Bahrain, as the case may be. Now, this is not a new topic here, because I can tell you the way Middle East or GCC brought VAT from different part of the world, especially having some understanding or taking some references from the EU law. In the same manner, they have also brought some challenges actually from EU, maybe from India, and maybe from different part of the world. And almost everything is something which is linked to any part of the world that you've already seen actually. So if you look at this particular slide, I can tell you it is not only 5%. You have all kind of challenges. You just need to figure out how to interpret the right approach, how to interpret this specific transaction, and how can you optimize any transaction wherein you can save any additional cost for VAT. Because 5% looks small, but I can tell you people are running on very thin margin. Businesses are running on very thin margin. If you have 5% input, 5% output, that becomes 10% actually overall cost to the business. Now, at this stage, I would also like to touch upon input VAT credit that I've not covered in any of the slides. Input VAT credit looks very simple, but I think after GST, we all know that reconciliation of 2A, 2B and everything. So we can understand that how important that input VAT credit requirements have become. Now, in UAE as well, there are lots of requirement and limitation, and one of the limitation is that you cannot claim input VAT credit for the amount which is related to the employee or which are related to the personal expenditure of the employee. So anything which is not related to business activity of the taxpayer is not claimable. And I think this is This is exactly the same that we see back in India as well. Now, before going to talk about some opportunities, I want to cover some understanding around the market here in GCC as a whole. And my recommendation would be that you don't focus only UAE. So right now we are talking about UAE, which is one of the main center point or the discussion for us. You must have seen that the arrangement in UAE, Oman, and KSA are almost similar. And why I want to bring two countries in place, because once you have already explored, understand the market of UAE, you can also get some understanding about Oman and KSA. Why we want to cover UAE first? Because access to the market in UAE is bit easy in comparison to maybe KSA. Oman is also simple actually. I find Oman as well very simple to access. Now, you should not only focus on VAT, although this specific discussion is on VAT. You should also explore other things such as corporate income tax, or maybe transfer pricing, or maybe other accounting adjustments or arrangement that we do, including costing and financial modeling that I'm going to talk in the next slide. So let's talk about the opportunity, and these opportunities are not specific to any of the items, but in general, if you look at it, these opportunities are something which are coming from different items that we have looked at it, and these opportunities that you can create for yourself. One thing is important. Sometimes people believe that, look, UAE market is already flooded with so many professionals. We have very less opportunity. And lately, what I understood that less is more. So the less opportunities you have, you will be more focused to grab those opportunities. If you know that you have multiple things to grab, you might not keep your focus on different items. So I'm just giving you some understanding. For example, demographic understanding. If you look at it, all the countries that I've talked about, very close to India. We have similar culture with lots of professional peers. So when I moved back in 2017, late 17, early 2018, I was thinking that, oh, I'm moving from India to Middle East. This particular move is going to be a good one for me or not. And I can tell you, I don't regret it. I don't regret it. Why? Because at that point in time, there was one particular myth that every person used to have. Oh, if you go to Middle East, your experience will not be counted in India. Why? Because you don't have any taxes. They don't follow proper accounting. They are just following whatever they want. But here, as of today, if you look at it, you have all the taxes. And that follows that you also need to go back one step. Whenever you have auditing, whenever you have assessment, you need to follow proper accounting rules to establish what you have done with the books of accounts. Is it something which is tallying with your trial balance? Is it something which is reconciled with your different, maybe it is customs, maybe it is transfer pricing, maybe it is your corporate income tax, which is going to be very soon in UAE. So you need to look at from a holistic perspective at how you can club everything together, and you can come up with your own ideas, not only to share with the business how they can be 100% compliant, but also share your understanding how you can optimize the business as a whole. Second thing, very easy company setup with minimum presence. And there's an option to work from anywhere in the world. And the last point that I've mentioned, which is be flexible. I can tell you this is something which I have learned the hard way. I mean, flexibility is something we all used to work. Oh, if we don't have team with us, we can't work. So if I'm thinking about having operations in UAE, then I need to have my team in UAE. No, if you are flexible enough to have your team anywhere and in any part of the world, then Dubai or UAE is as far as you are from Delhi to Mumbai, Mumbai to Chennai, Chennai to anywhere in India. So don't consider that if you want to explore in UAE or Middle East, that is going to be considered more troublesome. No, if you are aligning yourself and you want to have and you can keep the flexibility, and of course you can do wonders here. Now, growing taxes, we've already talked about that. VAT is already there, corporate income tax is coming, TP is there. There are some discussion on pillar 2. Not only this, if you look at any company who are coming to Dubai, UAE, or Kingdom of Saudi Arabia, they are also working on costing and financial modeling. And I can tell you, probably every week, we are receiving a request to review 2 to 3 financial models, or maybe sometime more than that. And what we need to do, we need to look at the financial model, how the company wants to do all the activities, and on each and every point, what kind of tax implications could be. And we, from a tax perspective, we need to go back and tell, look, your financial model looks fantastic. Can you please also make some changes so you can optimize some taxes? And this is something not only from a financial perspective, but from a costing perspective as well. Why? Because if you look at KSA, which is Kingdom of Saudi Arabia, they are moving, they plan to move, they wish to move their economy from an oil-based economy to a more non-oil based economy. If you look at it, what we have here in this region, UAE, if you talk about Dubai, mainly they are based on tourism, plus they have the oil-based economy, which is not that much. If you talk about KSA, and if you look at their budget for the year, okay, and you can get it from the Google or maybe Chat GPT that can help you out, you will find out that the most of their revenue is coming from the oils actually. But there are so many studies that going forward, that oil-based revenue might not be workable. Actually, one of my colleagues just came in and he wanted to see me actually, but I will continue this one. So non-oil based economy is something which comes with tax. And this is what is happening in this region. And I'm giving the reasoning why taxes are important for this region and what role these taxes are playing from a macroeconomic perspective. We are not thinking about what is 5%, what is 15%, how to fill the VAT return, how to complete the compliances. We are thinking more strategically how you can become a trusted partner with any of the business to give them costing, financial modeling, create their different scenarios, models, at which a specific sector, which a specific country would be suitable for them to have more and more business. And this is where I want you to focus, that you focus not only on taxes, focus on something which will create bigger opportunities for you. Don't focus on filing the VAT returns. Don't say, oh, there is no mention of cost accountant and UAE, so how can I do something? Now, the third one is emerging content niche. And this is something I believe that we as Indian cost accountants can do wonders. Why? Because we know GST. VAT, this VAT is nothing new for us. We have already have done so much in GST. We know income tax, we know costing and financial models. And you can develop that technical content to share with your clients, to share with the market. And again, be flexible. I mean, if your market is not responding to your content on costing, try to make it something on finance. Then if you are able to see some responses on finance, go back to the costing. You can develop your service offering, your service product, which can be sellable in the long term. Now, support clients with the health checks and audit files. So when I say health check and audit files, I'm talking about health check for VAT. Just reach out to them. They say, oh, look, I can just go through all the transactions that you have. I can provide you some inputs wherein I can share my inputs with you and you can look at it at what are the risk areas that you have currently. It might be subject to VAT, it might be input VAT credit, it might be any other items that you would like to look at. The last one, I know analytic tool is not available everywhere, but trust me, if we don't start working on the analytic tool, if you don't start using the AI now, it might be a very, very tough situation for all of us as a professional. And this is where we all need to start focusing on the AI tool that can help us out to create a talent hub in India, which is already there. So you can have some work in UAE, you can land that client, and you can deliver everything sitting back in India. Of course, subject to the local rules and tax requirements. That's something you need to look at. And this is something which is already in trend. I can tell you, there are so many companies, they have their operation here in Middle East. They have the whole team here in Middle East, but most of the work has been delivered from India. So in India, they have already set it up their team. They're supporting them online teams, sessions like this to get most out of everywhere. And again, this comes up with the flexibility and the idea that you can work remotely without having people around you. And that's something which is very, very important. And this is, I can tell you, if you want to go global, if you want to grow within your network, then of course you need to bring this flexibility in your way of working. Now, this is pretty much it from my perspective. I've been told by Mr. Bhati and team that I need to cover the session from a holistic and broader perspective. I've refrained to touch upon any technical item because otherwise I go so much in detail on the technical things, and that's not the objective of this session today. The objective of the session is just to give you the broader understanding of the Middle East, broader understanding of the GCC country, and what kind of taxes we are referring here. My request is that we try to have a Q&A session, not to talk about technicals, but to talk about how we can get into this market, and also to help each other at how we can develop more opportunities for a cost and management accountant in this area. So yeah, thank you so much for the session. Now we would like to go for the Q&A session. Mr. Bhati and Priyanka, if you're there, then this is over to you, please.
Priyanka, please.
Sir, there are a few, very few questions which have been published. So one of Mr. Fernandez, he has a question. Is the law same throughout GCC?
So law, so when you say law, law is different countries, they have their own law. So like I've mentioned, there are three main documents that you need to follow. Document number one, GCC treaty or GCC agreement. That gives you the complete tax or VAT framework. But when it comes to a specific country, you have a specific country's VAT law and you have a specific country's VAT regulations. So answer to the question, no, the VAT law and VAT regulation for each country is different. And also the guideline that are being published by each countries are different. The one main document that you can refer for all the countries, that is GCC treaty or the agreement. I hope I'm able to clarify the question raised by Mr. Fernandez.
Sir, one more question we have. It is from Mr. Shrikant.
Go for it, Priyanka.
Sir, the question is, sir, there is in UAE, is there excise duty? So how is excise duty in UAE, the VAT? How are they interplaying? How are they merged and how are they working together?
Good one, very good one. So yes, in UAE, excise is there. And of course, custom is also there, but I've not touched upon. But excise is not working in the same manner, the manner it was there in India actually. So in India, it was mainly on manufacturing, and we used to work on those 4M manufacturing mentioned in CETA, all those things actually. But in UAE, this is more on uh, like beverages and all other items. So there's a complete list of product on which excise is applicable. Now, there is no merging between excise and VAT. Excise in itself is a tax, which is mainly for like, this cold drink and other beverages, sweeteners and other items, it is applicable. So there's a complete list. And if needed, I can circulate to you, and you can further circulate to the attendees on the call.
So another question from Mr. Fernandez, which says that if you can kindly illustrate with an example, how would VAT work in UAE? Like with a practical example, if you can explain.
So, Priyanka, this is, or Mr. Fernandez, thank you for asking the question. This is very simple. The way it works in India, GST, it is the same manner. So, for example, I want to buy this particular pen, okay? And this pen was manufactured by any of the manufacturing company. If they buy this pen to manufacture, they take the whole pen, like whatever the different materials from different suppliers, all the content, they produce, manufacture this pen, whatever the different items they have used, there must be a VAT on that. So the supplier of the raw material, they have put VAT on that one, plus whatever the overhead has been computed, VAT on that, plus any other item which gone, maybe other labors or any other things, VAT component is already been built in. So the manufacturer of this pen is going to claim input VAT credit on all the expenses, be it product or services. That particular pen will go to a distributor. When this manufacturer is going to sell this pen to the distributor, a VAT of 5% will apply. When the distributor is going to sell the pen to retailer, again, distributor is going to claim the input VAT credit of the 5% VAT. And then the distributor is going to sell that particular point to retailer. So in between, whatever the margin it is coming in. So for example, the manufacturer is selling for $5, then the VAT would be on $5. Then distributor is going to sell it, let's say for $6, the VAT would apply on $6. Input VAT credit on $5 will be available to distributor, and then distributor is going to sell it to retailer for $6, and VAT needs to be paid to the tax authorities. In the similar manner, then retailer is going to sell this pen to the end customer with their margin, and they need to apply VAT. So in nutshell, the VAT is being applied in the same manner the way you apply GST in India. And in all practical scenarios and requirement, VAT is applied on margin. So that is the value added tax actually that's been applied. Now in the whole cycle, there are some nitty-gritties. For example, if you want to export this pen, what is the VAT rate? It is zero rated with some considerations and subject to some conditions, such as you need to take this pen out within some specified limit. You should have a document to prove that this pen was exported from UAE. You might also consider to have this pen in any designated zone. You need to look at it. If that zone allow you to some benefit, you also need to look at it. If you are importing some raw material from outside the UAE, then custom is being paid. If you are importing some equipment, manufacturing product, if custom needs to be paid, can you apply for some suspension of custom regime? Can you apply for suspension of VAT? All those things comes into the picture and comes into the play. So it is almost similar the way we do back in India. And I can tell you the challenges, issues. Now, in the pen manufacturing process only, I've already tried to connect all the taxes. Issues could be like, I'm manufacturing this pen and I'm also claiming input VAT credit for the catering services that I provided to my employee by saying that, look, these employees are working for me. I'm claiming this input VAT credit. Tax authorities might come back and say, oh, you know what? This is not your business expense. This is related to an employee. I'm not going to allow you the input VAT credit for this. Or there might be some other issues. You are buying insurance for your employees. You claimed input VAT credit on that insurance amount. Uh, Tax authorities might come back, oh, this is related to employee. We don't allow you input VAT credit. So these are the challenges that we see. These are the items that we consider. Now, for manufacturing this pen, I might need to set up a factory in UAE, and then you as a professional need to come back and say, oh, let's do the financial modeling, how we want to do it. Do you want to manufacture any specific factory or set up a factory, not manufacture? You want to set up a factory in which area, in which zone, or let's do it from which country we want to import, from which country we want to export. All these items comes together and makes a comprehensive uh, arrangement to comment upon, to provide our comments, and to share how we can optimize the complete transaction. Yeah, I hope it makes sense by connecting all the dots. Yeah, Priyanka, do we have anything else?
So one more question we have. We have it from Mr. Devendra Deore. He says, like in India, for verification of excise duty, we depend on officials, government officials like inspectors. Like in UAE, is it system based or is it manual? Like people visit and they do the verification.
They do the verification. And in fact, earlier it was not there, but yes, verification is there.
Sir, one more question from Mr. Satya Murthy. Is there e-invoice concept you introduced in UAE and GCC? And is there a difference to book the revenue between VAT and company, especially in case of exports?
Now, I think these are the questions that I was looking forward to. Thank you for raising this one. So answer to question number one, e-invoicing. No, as of now, there is no invoicing in UAE. So there are already in talks applying e-invoicing in UAE. And I can tell you it is going to be a very, very soon that you will see e-invoicing in the UAE. But when it comes to KSA, which is Kingdom of Saudi Arabia, e-invoicing already got implemented effect 1st January 2023. So e-invoicing is already in place. E-invoicing and how that e-invoicing is different from India, not much of a difference. Generally, if you see, you have 2-3 kind of e-invoicing system or arrangement, which is soft clearance, hard clearance. In this case, in the Kingdom of Saudi Arabia, the arrangement is that if you are issuing a B2B invoice, okay, and there are two phases. One is generation phase, and second is integration phase. So generation phase simply says, make sure that you are generating a proper e-invoice, and integration phase says that if you are able to generate a proper invoice, let's integrate that to the tax authorities portal. We call it here as a Fatura portal, and Fatura is nothing, meaning of Fatura is invoice actually. So what happens when it comes to e-invoicing in KSA? In case of B2B invoices, you have to generate e-invoice as per the requirement of the law. That e-invoice needs to be in PDF A3 format, embedded with XML. Of course, there are some XML standards such as UBL 3, 3.1, all those kind of a thing. And there are some data dictionary and other mandatory, optional, and conditional mandatory requirement that you need to follow. You have to issue a B2B invoice. You have to push that invoice to the tax authorities portal. Tax authorities portal is going to approve or reject your invoice. And the moment you get an approval from the tax authorities portal, that data comes back to your system. Now, once you have approved invoice from the tax authorities portal with cryptographic stamp and all the UUID and everything, you can share that particular invoice with your customer. So this is for B2B. Now, in case of B2C, you can issue the invoice, but right after generating the invoice, you have to upload your invoice to the tax authorities portal within 24 hours. So because B2C, especially if you consider over-the-counter sale, maybe any hypermarket, supermarket, maybe medical store, all kind of items, if you look at it, you have to generate a proper invoice right away. People who are standing on the counter, and you have to provide that particular piece of slip. Now, in case of B2C, you can generate a simplified invoice, which is a bit different than the regular invoice. Now, regular invoice would have a proper end-to-end requirement, but in case of simplified invoice, you have very limited requirements. And since the buyer cannot claim the input VAT credit, you right away issue it, and then you upload it to the tax authorities portal. So answering your question, yes, e-invoicing in KSA is there, e-invoicing in UAE is not there, but they are working to develop and implement e-invoicing in UAE very, very soon. Right now, they are very much focused on corporate income tax implementation. The next project for them would be e-invoicing. Number two, are they reconciling the revenue in the books of accounts? Yes, the revenue between books of accounts and invoicing and then VAT return is required. So three-way reconciliation is the trend that everywhere in the world is there. Now, there might be some differences that might be due to some IFRS requirement wherein you have done some revenue recognition in your books of accounts, but you're not supposed to record those items in the VAT return. That might be one of the reasons that you have higher revenue in your books of accounts, but lower revenue in your VAT return. You might have some transactions such as maybe transfer pricing adjustment entry, because you need to maintain certain percentage to have the transfer pricing approved benchmarking margin. And now you're booking an entry in your books of accounts, then authorities might challenge that and say, oh, you know what, this is your revenue, let's pay VAT. But you have to establish that no, there's no economic activity per se, this is just a transaction, and all those kind of arguments. There might be some challenges. Maybe your contract is on milestone basis, that you record revenue on milestone basis every month at the time of closing each and every month, but later on you issue invoice at the time of your milestone agreed payment actually. So whenever you are agreeing to any milestone payment. So these are the couple of main examples. There might be many wherein there might be some difference between your books of accounts, your VAT return, and the e-invoicing portal that you're reporting actually. So in a nutshell, e-invoicing is going to come. You need to have three-way reconciliation. You might have differences. You need to go back with the reasoning of those differences. Yeah, Priyanka, do you have any other questions?
Sir, if you can, this is a question from Mr. Soumya. If you can throw some on the applicability of RCM in UAE.
Yeah, for sure, for sure. So technically, if you look at it, RCM in UAE is similar to what we have in India, but you have one very small difference, which is an important one, that you don't need to pay anything in cash. So back in India, if you look at it, you record something in RCM. First, you pay to the tax authorities, and then you recover in your VAT, GST return. Now here in UAE or KSA, you report transaction in RCM, but you report it as a disclosure item. So no actual payment of VAT to the tax authorities, and therefore no actual cash flow. In which specific scenario you need to book this particular RCM. That might be that you are providing some services, you're receiving some services in UAE, and the place of supply of that service becomes UAE. Remember, we have talked about place of supply and point of supply. The place of supply plays a very, very crucial role. And I can tell you, wherever any challenges comes in, that is mainly because of place of supply. Because all tax authorities want to say that, oh, you know what, place of supply is in my country. You're taking benefit of this particular supply in my country. The actual benefit or any benefit from using this specific activity would be, I mean, taken within this jurisdiction. So therefore, I need to apply VAT on this. So when you are receiving any services, in that case, you need to apply reverse charge mechanism. You need to look at it if the place of supply is in UAE or not. Apart from that, you also need to figure out in case of importing a product. So if you are importing any product in UAE, you also need to record VAT under reverse charge, and that VAT is something that can be disclosed in your VAT return without making any payment. So these are the examples that you can see for RCM in UAE. And similar kind of RCM arrangement works in KSA as well, which is Kingdom of Saudi Arabia. The only difference in Kingdom of Saudi Arabia is that before COVID, if you are importing any product in the Kingdom of Saudi Arabia, along with the custom duty at the time of importation, you also pay VAT. But back in December 2020, when COVID relief and everything was in trend, the tax authorities have issued a notification that going forward, you are not required to pay the actual VAT at the time of importation of product. You can disclose that particular amount in your VAT return. So yeah, these are some examples to cover RCM. Yeah, Priyanka, do we have anything else?
Sir, we have one question. This is not directly related to GST. It says it is by Mr. Devendra Deore. It says like is accounting standards like Indes that we follow in India, is such accounting standards followed in UAE as well?
Yeah, so it depends company to company, but the standard that I have seen that is being followed, that is IFRS. So IFRS are being followed, especially we keep seeing that IFRS 15, because mainly when it comes to taxes, authority always challenge on the revenue recognition part. And respective company, respective taxpayer always need to go back preparing a note that, look, I am doing this particular revenue recognition as per IFRS 15, so and so, this is my transaction, blah, blah, blah. And that's how we try to make them understand about it. Answer to your question, yes, there are standards that are being followed all across GCC countries.
Sir, we do not have any more questions as of now. We would request Bhati sir if you want to like give us
Yeah.
an ending note and help us through.
If you please allow me, I would also like to mention a couple of items, and then
Yeah,
we
sure,
can
sir.
hand it over to our artist, sir.
Okay, sir.
So thank you everyone for being available on the call and this webinar. If you look at it, we try to cover all the requirements from a very broad and holistic perspective. One thing that I can share with you that this particular opportunity, especially for CMAs, are very, very lucrative. I mean, you can get so many things out of looking into this Middle Eastern uh, uh, jurisdictions or countries actually. And it is not end right now. It has not reached to that saturation point right now. I know VAT got implemented back in 2018, and people who are already grabbed these opportunities are trying to like thrive whatever they do. But I can tell you that we still have so much to do. And if you don't look at the past and say, okay, I mean, there's no missed opportunity, we can still look at the future, especially on the taxes, especially on the financial modeling, especially on the cost modeling, because I know for a fact there are few CMAs who are working on cost modeling in the Middle East region. They're working on financial modeling in the Middle East region. They're not only focused on completing or filing the VAT return. They are more looking at from a holistic perspective. They are acting as a management accountant, rather just a accountant actually. And that's where they people locally here also see the contribution, the value addition from a holistic perspective, not limited to being a compliant person from a tax perspective or just making sure that we are making sure that all the returns are being filed all time. So that is the only request I have. If you need any support, I'm here. Mr. Bhati is here. We would love to support you for any kind of questions, queries, or any support that you need in this area. Now, over to you, Mr. Bhati and Priyanka.
Yeah, thank you very much, Robin. It's a very great discussion, and you just simply some sort of things we have understood. But one thing I have a question that in India we have a state provincial system, like we have a state and then SGST and GST. It is not like that there, no? It is something different because only the central board is there, like VAT we are talking, then we think about the VAT is for the goods. We were having a service tax for that separately by the central. But there I think it is not like this because I have seen some countries where there only the one tax revenue board is there and they collect the all the things. VAT is on the service tax also, well, services also. But if you talk about any Indian people, VAT on the service, so he want accept because this sort of a system is different then because here we feel we have this department, we have again IGST, then we have a CGST. These are the central people, these are the bifurcation. So administratively it is easy to manage, and if we practice in, so we know that only one law we have to follow and do it. I think India to your state is easier one.
Yeah, sir, absolutely correct. So okay, probably it's my this thing that I assumed that people might be aware of about the arrangement, but you're absolutely right. This is really important point to understand because if you look at it, in India we have the arrangement. We have state taxes and then we have federal taxes, which is central taxes actually. Here, there's no different taxes actually. It's 5%. You have a standard this thing return to fill. Comparatively, you don't have that much of complexity when it comes to operations. So I would say the operational complexity is less, but when it comes to the technical complexity, you have the similar nature of complex transactions. And this is what my suggestion is. Don't look at the operational complexities to say, oh, you know what, we have 10 different, or let's say for 28, 90, 30 different return to fill or complete. Okay, but the transaction for all those 30s must be the same, no? Now, I can also understand the next argument could be that every state want to look at that particular transaction differently. That is a challenge. That challenge comes here as well, differently from one tax authority's perspective instead of multiple tax authorities looking at one transaction differently. So I'm in agreement with you. In that sense, it's a bit of a comparatively not that challenging country or jurisdictions if we compare with India. So yeah, I'm with you on that one actually. Yeah.
Okay. Yeah. That yeah, from your presentation, I came to know, and I heard that this sort of a system is not there. And thank you very
Yeah.
much for enlightening us in a 1.5 hour session. And we were just always trying to having something new will come, and the time came about 4:30 because it was a short of a time. And one part of a good thing is that after this session, we will be planning to have our office in UAE, or you are in the hospitality industry and transportation. That is also one of the good advantage. So we can take your advantage also. So thank you very much. We will have some in detail sessions also in the corporate the tax is coming in UAE. So we will require your support for some technical sessions. And whenever you come down to Delhi and India, so we'll have some physical sessions also. So do let us know. And thank you very much from our side for sparing your time from your busy schedule and be with
Anytime,
us.
sir. And I look forward to all the physical sessions here in UAE. And of course, there is a lot to come with your leadership and the whole council, the way you guys are supporting all the members to learn something new. I would say that there's a lot to learn, a lot to come up in the near future. And we are happy to support you in any of manner that you want. So thank you so much for this opportunity. And I'm obliged that you had me in the session today. Thank you.
Thank you. Thank you. We are ending 4 minutes before the session.
Yes.
So thank you very much. We have started on
Thank you.
time. This is this I will give you credit to my taxation department. They start always the program on a time and end landing before the time also. So thank you. Keep it doing my taxation department and Robin for
Thank you so much, sir. Thank you so much. So we are ending the session, sir. Thank you.